I'll discuss our STO, or excuse me, our security token offering. So, talking about secondary market, we're talking about, in one word, private companies. Private companies that are creating enormous value, are staying private for a longer time. So you have companies that are what's called unicorns. Companies are worth over $1 billion, but they're still private. You have tetacorns, companies worth over $10 billion, and they're still private. Just to name a few: Uber, Airbnb, DiDi, and the likes. And the problem is that you have these companies created enormous value for their shareholders, but because they stay private, and we're talking about if 15 years ago companies would go public after 3 to 5 years, now they stay private for 10, 12, 15 years. So again, you as a shareholder, you did really, really well, but you can't enjoy the value that was created. So alongside that problem, the secondary market grew and has reached enormous values of over $60 billion in 2017. In 2018, the numbers are not released yet, but they're actually growing. And you see that the end game of these companies actually going public and providing the added value is happening. You see more and more of these companies finally going public. If you take 2018, you have Spotify and Dropbox and the likes. And in 2019, you have upcoming listings of Lyft, of Uber, of Palantir. So these are companies that finally, after 15 years, they do go public. But you as a shareholder are stuck. You need to have all kinds of solutions along the way. And that's what the secondary market is coming to provide. So as I said, the secondary market is evolving, is growing, but is still very undeveloped and still doesn't provide solutions to many types of shareholders and of investors. And by that, I mean the small stake ones. Okay, if you're a fund sitting on $20 million of Airbnb, you'll probably find an investment banker that will help you to liquidate it. And we'll find you, that secondary fund that wants to come in and take your place at a later stage. But if you're an employee, former employee, founder, you're sitting on shares worth $1 million, $2 million, nobody's going to help you. Okay, the company is not going to provide any information to help you sell your shares. Investors that want to buy into these shares are not going to buy it without this information. No investment banker is going to deal with you if you have $1 million, because how much can they already make on their fees? So you as shareholder, you've been working your behind off to get these shares. Nobody's helping you to sell your shares, and that's what we want to do. We want to help you sell your shares, even if you're a small shareholder. And the way we do it is we aggregate from several shareholders into one block of shares. Okay, so that's how that's the sell side that we want to help. From the buy side, okay, we're talking about private companies again, so access is limited to accredited investors, qualified investors, because again, these companies are not reporting, they're not giving information that you can approach the public and retail. So it's only limited to accredited investors. But the fact that you're an accredited investor doesn't mean that you actually have access to buy these shares. If you're an accredited investor out of the US, you're making $200,000 a year, $300,000 a household, or whatever it is, you qualify. Does that mean that you can buy $150,000 worth of Uber shares? The answer is no. You don't have access, definitely not at these thresholds. If you want to buy $20 million, maybe you could. Even if you had $1 million, and theoretically, if I could bring you a block of $1 million of Uber shares, you don't want to put your entire $1 million on one company, on one basket. So we want to give you access to these shares, and we want to give it to you in low thresholds of $50,000, $100,000, okay, where you can now take that $1 million that you want to invest in pre-IPO shares and create your own pre-IPO fund. Split it into 100,000 Uber and 100,000 Palantir and 100,000 of Get, and now you're diversifying your portfolio. And we also, as a service, we provide you an independent third-party analysis that gives you information, because these are pre-IPO companies. They behave like listed companies, because there's a lot of information out there that can be aggregated using BI and AI. So we provide you also this information for free. And by combining this, that first of all, these are shares that everybody wants. We're giving you information, which is third-party analysis, and we're giving you low entrance figures that you can also diversify. That brings you into a position that you can actually make a good, conscious investment opportunity. So that's the secondary market, and that's our niche and our approach into the secondary market, and it's something that is growing. And we're, as a platform, we've been working very hard and have accumulated shares that are listed on our platform already from 20-some companies worth over $100 million in the aggregate, and they are ready to be wrapped up and transacted. Now, in order to provide this meeting point for small stakes, we have to find a structure that holds up. And so, like I said, from the seller side, we aggregate it into one block, and they're very patient because they have no other solution for them. From the buy side, I don't want to start creating 20 transactions of $100,000. I want to create one transaction of $5 million. So the way to do it is we set up a dedicated SPV, a dedicated limited partnership that buys the entire block from all the sellers. And now, since it's a private company and I have to go through a right of first refusal vis-a-vis the company, I only do it once on the entire block. So the shares go from 10, 15 employees into one partnership, one transaction, and we close that, and the partnership is listed on the company's cap table. And you, as an investor, are holding participation units, limited partnership units, in this SPV. And like I said, you get access to something that is not accessible until now, and you're able to diversify your portfolio. Now, by doing that, in parallel, we were looking for a better solution for your investment, because if you're an investor and you're holding, again, if you step into the shoes of the seller and you're holding private shares that are not liquid, so you're stuck in the same position. We wanted to bring you into a position that is better, that you actually have a liquid asset, and that's where security tokens are coming in. Because we created this layer that is under our control, which is that partnership, we're able to now tokenize these participation units, and so they are reflected through security token, asset-backed tokens that are fully regulated, that are tradable in the right way. So you're not dependent on the token performance to actually make a profit, because tomorrow, if the token didn't do anything but the underlying asset, the target company, had an exit, an IPO, you still make your money. On the other hand, but at the same time, if the token did perform, and we did create this liquidity options through security token exchanges, once they come up in live, like T0, and the likes, we took this illiquid asset, we fractionized it, and now we turn it into a liquid asset. So if something good does happen along the way, you can actually enjoy the increment of value and exercise it. And the only way that we can do it is because we created this layer, because I do not control the cap table of Palantir. But once I put the block of shares into this SPV that's under my control, now I can tokenize it. The shares stay there until a liquidity event, until an IPO. They don't move. They sit in this SPV. And what we're creating liquidity for, is for the participation units. By doing that, what we do is we want to attract not only traditional investors that want to be exposed to these new methods of investing. At the same time, we're also a gateway for crypto investors that want to get exposed. Basically, they want to tie back their crypto to real world assets, okay? And now when they can use crypto to buy these dedicated tokens, okay, so they're actually taking their crypto and they're backing it up with actual assets. So there's no crazy volatility, there's no risk of it tomorrow disappearing. You're using crypto to buy shares in Uber. You're using crypto to buy shares in Palantir, and that is something that a lot of crypto investors are looking for. And that's something that they can do through our platform and through our solution. So we talked about the secondary market. We talked about how we connect it to blockchain technology to take advantage of this technology. Maybe it's not the way that the founding fathers thought it would be used, but we think that that's the right way to use this technology in a regulated manner, asset-backed, not volatile, conservative. And that takes me to our STO, our security token offering. What we want to do is we want to raise funds for our platform. We want to raise $10 million, and I'll explain what we're going to use it for. And the idea is that we are going to set up our platform token, or it's called the PEC, the private equity coin. And the platform makes money from all kinds of revenue streams. Whenever there is a transaction performed on our platform, we collect a fee. Whenever we set up an SPV, we collect a management fee. When there is an exit event at the target level, at the target company level, we have a carry success fee. So the more and more opportunities, the more and more transactions that happen on the platform makes more money. And what we're offering now is whoever invests and participates in our STO and receives the PEC entitles him basically to three things. First and foremost, 20% revenue sharing on the platform. So if the platform makes $10, $2 go out to the PEC holders on an annual basis. We distribute it, and we're talking about top line revenues, not profits. Okay? So you don't care what kind of salary I make and what kind of bonus I gave to my employees. It's irrelevant. If you know that the platform made money, you don't care what the expenses are. You get from top line, and this is because we want to be completely transparent. These are not shares. There's no voting rights. So you just need to know at the end of the day, at the end of the year, we have an audit, and whatever came in gets distributed. So that's the first thing. The second thing is that you as a PEC holder, you have a first right of participation on all opportunities that are available on the platform. So if tomorrow I am bringing you these sexy investment opportunities to buy into Uber shares or into Palantir shares or into DiDi shares, okay, I first offer it to my community, to my PEC holders, okay? So they have the first right of participation in these opportunities, and only after that, people that are on the platform, that are whitelisted as accredited investors, they get to participate, but only after my community have first take. The third thing is we're going to use 40% of the STO funds to buy shares of these pre-IPO companies and set up the first tokenized SPVs. It's the first tokenized partnerships. And so if we raise $10 million, we're going to use $4 million to buy shares and set it up. You as a PEC holder have a right to convert up to 40% of your PECs into dedicated tokens. So now I'm giving you an opportunity, if you want to sit at the index level and have basically exposed to the entire platform, you sit on the PEC, and obviously every transaction that happens on the platform affects you. On the other hand, if you want to mix and match some of your PECs into dedicated, if you know that we bought $1 million worth of Palantir, and you want to say, okay, I want to convert some of my PEC and be exposed directly to Palantir, that's something that you're able to do. Okay, so that's basically our STO. It's limited to qualified accredited investors, again, because it's a security token, and that's it.
Thanks a lot, Chaim. That was very good explanation about TheElephant. I want to open the forum now for the questions and answers. Please feel free to ask questions if you have anything for Chaim. You can also type your questions in the chat, and I can read it for you if you want. Okay, looks like no questions so far. I have your information, your email IDs, and I'll be sharing information about the projects, their summary, pitch deck, and everything. I'll be introducing you with the founding team. So if you don't have any question right now, but if you want to ask something later, we'll have an opportunity to do a follow-up one-on-one with the founding team and ask more questions about the project. So thanks a lot, Chaim.
Thank you, everybody. Thanks, Pankaj.
Thanks a lot. Why don't we move on to the next project, which is Datium. We have Michael and Charlie on the call, and they will be talking about Datium. Michael, Charlie, are you on?
Sure, yes. Do you hear us?
Yep, we see you, we hear you.
Okay, great.
Thanks a lot.
Hi everyone. So here's Charlie, the CEO of Datium, and I am the CPO. So we're here to present you, to introduce you Datium. So please hold on a minute. I'm just sharing my screen. Up. Okay, everyone see my screen, the presentation?
Yes, we can. Yep.
Okay, great. Up.
So hello everyone. We're here to present you to Datium, a project we're working on since more than 2 years. We are based in Barcelona and Paris, and the company is registered in Tallinn in Estonia. So what's Datium? We are a platform. Datium is a platform which is linking crowdsourcing to blockchain to enable the collection of all global physical data. When I speak about physical data, I speak about all the visual elements you can see while walking on the street. It can be stores, traffic lights, trash cans, street lamps, for example. And that's anywhere in the world with 100% accuracy. We are doing this through using a workforce of collectors who are incentivized with our XDT token. So how does it work? It's very simple. It works with a mobile application. We have a very friendly user interface where users can collect data such as the name, the geolocation, the address, the photo, all the relevant data a physical data can contain.
So yes, what is the business model behind? So you understand that we reward people for collecting this element from the real world. And in fact, this data after that is licensed to market players. So it has a different, of course, use. So I can say many examples has listed, such as the digital maps, self-driving car solution, of course, in the next future, drone delivery services. And all of these services, and we put just an example, a set of logos that are basing their development and let's say the success of their application by the quality of the physical data. So if you take just an example, if you need to navigate from the point A to the point B, you will need to get access, for example, to the exact address, to the exact geolocation, and so on. And this is exactly the same for any other solution, such as, for example, the drone delivery service. We are all speaking about this new tool, and as you can imagine, it's very important to get access to the exact geolocation. And when we just analyze deeper the market, we see that this market is indeed very important, as it represents around $250 billion at the moment. And despite, let's say, the importance of this market, this data is facing to two issues. First of all, this data is hard to harvest, and this data is too often barely accurate. Just as a few figures as an example, you have globally only 30% of all the stores that are displayed online. And when we speak even about mature market like in the US, you have at least 50% of all the retailers that displayed inconsistent or missing information online. So simply with DataEum, by using crowdsourcing and the blockchain technology, we answer to this issue by being at the moment the only solution able to reach 100% of this data and also to make it accurate. So that's let's say the added value that DataEum is bringing to the market.
And this solution has already been tested and proven, as we have collected 1.5 million data in 3 major cities, Paris, London, and Barcelona. We have as a result proven the scalability of the model. We have as well proven the efficiency of the model, as we have collected 100% of the data in all the targeted area. We have proven that there was an issue in the market, as 40% of the data we have collected did not appear in any maps. And last but not least, we have a sustainable and profitable model, as all the data were licensed to top market players already. Here you can have some metrics about one campaign we did in Paris, where we licensed 50,000 physical data to a client, which is the Yellow Pages. The data collection cost was $0.35 per physical data, and we licensed it at 0.80 cents per physical data. So it was a ROI of more than almost two for this campaign. So how we revolutionizes the data collection? As you understood, first with crowdsourcing, because it's the only solution that enables us to access to any physical data anywhere in the world. Secondly, with linking it with the blockchain, as it enables us to have transparency and reliability on all the data we've collected. And we've created like a whole ecosystem. You can see there will be a marketplace where all the data collected will be available, and where all the data acquirers can have access to. And all of this will be powered by our XDT token, as we can reward all the people that don't have any bank account, which we can count 2 billion in worldwide. So for the next step, we have already new orders from all the clients we previously had, and we'll start in the end of the first quarter of 2019 campaigns in Paris and London. But we are also aiming to we're targeting 10 major cities in Europe and Asia. And at the end of 2019, we have the target of 15 million of physical data, and an ambitious one of 1 billion by the end of 2022. And of course, all this powered by a community of more than 10 million users globally.
So to introduce also who is leading the project, so we are 14 people at the moment. To introduce the 4, let's say, members of the core team, we have Charlie and Billy that are brothers. They are coming initially from they have a financial education, but they are coming after that from they were entrepreneur in the retail market. And they right after switch to the digitalization of this data. So that's why they have this knowledge between the real world, let's say, and their visible, the online visibility of element from the real world, let's say. I personally come from the world of data because I founded my company also 10 years ago in the insurance and credit. So basically with a data and a web background company that I sold to an insurance, to a worldwide insurance group. and Alain Rabahi, who is the CTO, handling numerous programming languages, and is an expert developer, and also have a strong background in the management of community online. We have, of course, strong advisors such as Jorge Rodriguez, one of the former Ethereum developer, Anders Larsson as well, ex-VP of Ericsson. And all of the project is, of course, supported by some relevant companies, such as Ecora or Venture ICO, that are two funds based in Southeast Asia, and of course, quite a good media exposure. So to summarize in a few points, what is DataEum? DataEum is a unique solution that answers to a real market need. So that's how also we were very, let's say, fast in the signature of strong partnership with some of the biggest market players in the market, that are TomTom and Yellow Pages, and we are currently even in advanced talk with players like here, Google, and I forgot the last one.
Bing.
Yes, Bing. And we are basing all of this ecosystem by in some way creating the Uber for the local data. Meaning by that, all you need is a phone. Imagine that if Uber did it like to in some way to provide like some transport services because you need to have a car and a driving license. In our case, you just need to have your phone just to work in the street of your city to get rewards. So that's how in some way we incentivize very easily a community. We're receiving hundreds of demand every day when we launch our previous campaign. And this is the case for the next one actually. So this is a strong system that also is enabling to bring a huge community within also the crypto space. All of that is of course led by a complementary team where we have this experience to develop a product from the idea to the maturity. So this is all of what we did in our previous experiences. And the key element is of course the profitability of the model, which is key in the, let's say, in the evolution of our of our development, and our expansion. We do have a sustainable model and quite a unique, let's say, component, which is linking the crowdsourcing and the management of community within the real world to the blockchain.
So here are some data about where we are right now and the company. So we have a hard cap of $8 million US. The token price right now is at 0.03. We are in the private sale stage, where we already raised 1.5 million right now. We also have written the company's valuation as we are open for equity as well. And you have we would be glad to send you some more metrics, but you have here some of the revenue forecast for the first year, which is 19 million, and for the year 4, a little more than 1.5 billion US dollar. Thank you, everyone.
Thank you.
Thanks a lot, Michael and Charlie. It's really good to see that you already have clients and data from different part of the world, and you are planning to expand with other major cities in Europe and Asia. So good luck with that. Good luck with the expansion. Let's see if we have any questions from the audience. We'll count till 3. 1, 2, 3, and no questions. Again, if you have any questions, feel free to write them in the chat, or you can also send them to me separately later on. Why don't we go ahead and bring Alan? Hey, thanks a lot, Michael and Charlie. And Alan, feel free to introduce yourself and talk about YANU.
Yes, hello everyone from Estonia, Tallinn. My name is Alan and I'm the CEO of the YANU company. Actually, the company is Robolab, but YANU is our main brand. And to introduce a bit, I would explain of how have I came to what I'm doing. So you all have been in a busy bar, I guess, in a nightclub or wherever setting. and standing in the line waiting for a drink and not getting it. It's quite frustrating, right? And let me tell you, when you're on the other side of the counter, or actually the owner of the bar, it's much worse, because you're not only waiting, but you're losing money daily. And I've been running nightclubs and then bars for like 15 years. And I have seen like hundreds of thousands of euros that I've lost because of that. The bar is kind of a bottleneck. And there are other problems that we are facing in our business every day. There's never enough qualified workers. The labor cost is quite high if we're talking about the metropoles or big cities. The bar takes a lot of room. Normal size bar might take up to 10 meters to serve people well. There's always a problem with stealing and error. The quality, consistency is quite different in regarding different bartenders, for instance. Shifts, for instance, if you're running a bar in airport, then you need 3 shifts of workers, and that's a nightmare actually. Slow service, like I told you already, and profitability, of course, too. So this led me to thinking of automation process. In the beginning, it was just an idea how to, make the bottles appear more quickly, or the serving part. But I walked in the local university, and the robotics team there kind of helped me to recognize that I should maybe think of the full automation. And that's how I came to an idea to invent a fully autonomous robot bartender. And the advantages of this machine is that it's super fast. This can do the job of 4 or 5 bartenders at the same time, and serve, let's say, around 100 drinks an hour, maybe even more, depending on the cocktail or drink. It's very compact. The whole machine is 3 meters high and 3 meters in diameter, so you can set it up anywhere. Quite a lot of options where you can put it, and it's also a mobile unit, so you can move it around if needed. You don't have to pay salary to the robot, of course, and it's fully autonomous. So it goes with one load around 1,200 drinks. The limit is set by the glasses that are stacked inside. So after this is finished, you have to reload. No loss, of course, because everything is monitorable. You can check the machine status, and if there are any problems, then it lets you know immediately what tasks you need to do. The payment is, of course, on the background, like you use your Uber app, for instance. And before you ask that, what are the advantages of compared to the regular bartender with whom you can talk, then our machine can also talk and communicate with you over the chatbot that has an AI behind it, and so on. How far we are? The prototype is ready, and we are right now preparing the launch at United Nations show in Geneva in May of this year, so in like 4 months or something. So there you can see already the commercial prototype, and we are going to produce the first commercial versions for this summer, and full production is going to start in the end of this year. So actually 2020 the production should be in full swing. Our market is quite wide. I would say all the busy bars around the world. We are first aiming the airports because of the visibility and marketing purposes, and also it's a great playground to start from. Also, there are hotel chains we are talking to. Sports venues have shown their interests. Of course, festivals for the rental. Any bar or nightclub in the world is our clients. Cruise ships and similar settings. Excuse me. The business model is twofold. We are preparing the machines making them, selling and leasing, and helping to set up the bar units. So this model is suitable for the places that would like to purchase the machine, let's say clubs, bars, hotels, the venues whose main business it is. And secondly, we are also operating our own units, renting premium locations and doing the concession-based deals. For instance, airports are the places to do this because they don't want to own the machines and run the bars, but they usually propositions to run it for the other companies who do it. We are right now in negotiations with many companies, and we are aiming to the big ones who have capacity to set up like hundreds of units, let's say like hotel chains, for instance, and the airports, and even the global alcohol brands, for whom this is a great opportunity to market themselves, as in many countries you can kind of advertise the alcohol openly. So this is a perfect solution for that. We have over 20 negotiations, actually even 30 for now, and we are picking now the pilot projects. We are trying to pick very different partners for that, and also by the location. So there is something in every continent and area. Most of the clients have contacted us and found us, maybe by attending conferences, and we have done also some marketing. We have been featured in quite a lot of media. Fox News, for instance, has picked us up, and NBC. So the roadmap, our company is actually 3 years old, but registered 2 years ago. And our MVP is ready, prototype is done. United Nations conference is the next big milestone we are looking for. Also in Gulf area, we were invited to participate in GITEX Dubai. That is the biggest technology conference there. They are going to make us the kind of headliner there at the show. For the end of the year, we are planning to set up 10 to 15 units, depending on how many contracts we're going to sign for the pilot projects. And year 2020, we have already found a partner, local company in Estonia who is incorporated in Finland, for instance, actually, but they have 2 factories in India and in Estonia. They are going to produce for us for the 2020, and the plan is to produce around 100 units, depending on how many orders we're gonna get. But I would say that maybe we even need to produce more because the interest is huge. The company owners are 2 people, me and my partner Christian, with whom we have been running a nightclub before, so we go a long way back, and he's the great guy to partner up with. He's also an investor, a real estate investor. He has quite a decent portfolio here, so he has been also our main investor so far, and his fund. So we haven't taken in any capital from outside right now. We have been financing ourselves, and we will continue to do this also. But regarding the production cycle that is going to open up, we need some additional financing to speed it up just for the production. The core team, maybe the main guy here is Mr. Ablo, who is the professor of technology and robotics from Tartu University. That is the best scientific university here in Estonia, top notch. And 2 guys, Jan and Ken, who are brothers and who are the designers of this beautiful machine. This is also a technical team. Mr. Cedric is situated in Amsterdam, and he's our sales manager. And the advisory board, I would also point out, because these guys are kind of local superstars. All Mike Reiner is well known over Europe as one of the startup trainers, and he is also behind the biggest AI conference in the world, World Summit. Mr. Alexander is the owner of the biggest hardware accelerator in Baltics called Build It. Mr. Gorobeinik runs Estonian Cryptocurrency Association and is a member of parliament and also a technology wonderkid. Andrus is one of the first workers of Skype. He used to be a Skype world marketing manager and the founder of Pipedrive. Mr. Martinson used to be Estonian trade ambassador in China, and right now he's working in PricewaterhouseCoopers and advising them in cryptos and well, kind of the same technological field as we are. These are the three colors of our machine. The machine, as you can see, there's a robotic hand in the center. The screens are for ordering and communication, and yeah, that's how the machine looks like. And three colors we are going to produce in the beginning. So we're looking to raise in the first half of the year around 1 million for the production optimization, and another 1.5 in the end of the year for starting the production and fulfilling the first orders. Another photo of the machine. And here is a short video. I would advise you to take a look. It gives you more idea. It's actually a constant problem solving on the go. And that's why I developed the idea of creating an automated, trustworthy solution to help us out. At the same time, our robot, who is called YANU, has a soul, has a personality that is run by artificial intelligence behind it. The robot communicates with you, it takes the orders, sometimes cracks a joke, gives you suggestions, just like an old school gentleman. That's what makes our machine alive, friendly, and also comfortable to use.
The most exciting thing in YANU for me is kind of a combination of design and robotics. YANU will be very advanced. It will use the state-of-the-art device. It will be powered by glass mobile operating system to help us integrate the latest technology in terms of motion planning, integrating other elements.
When we talk about technology, we hear about design and the operation process, the hardware that so YANU has combined all these features together. It has smart design, and it's very easy to program.
Why is concept of personality? One side would be autonomy, would be trust, beauty, and a lot of times
And I really believe
So, thank you guys for watching the presentation. If anybody has questions, let me know. I also have an investor deck prepared, so please also let me know whoever wants it. I'll forward it over the email. So, yes, thanks.
Thanks a lot, Alan. Any questions for Alan? I have a question, Alan. So I see a lot of art form in the background. Is that done by YANU, or the artist is you?
The art, you mean at the videos and photos and everything, yeah?
No, I was just talking about the art form in the background in your room.
Oh, right. Yeah, I collect art.
Okay, so okay, that's not done by YANU, right?
Yes, absolutely. That's my hobby.
That's amazing. Okay, thanks a lot, Alan, for joining the call and talking about YANU. I see a really sophisticated robotic bartender here, and good luck for your Geneva show.
Thanks.
If no questions for Alan, then we'll let him drop. And now we have Amir on the call. Amir, are you there?
Hi there.
Thanks, Amir. You can take the control and start sharing your screen.
Sounds good. Just have to wait until another user stops sharing, I think.
Yes, just a sec.
I use so many VoIP systems now, you have to figure out where the buttons are every time. Is it BlueJeans? Is it Skype? Is it in appear in? Is it?
Hey, Amir, I made you host. Probably you should be able to share your screen now.
Yep.
Okay, perfect.
Great.
Yes, I see you.
Awesome. Thank you guys for joining us. My profile background is as a traditional market researcher. I had done hundreds and hundreds of quantitative studies as well as qualitative. And before I turned into a mobile games publisher, and before then, and later became more or less a commentator for blogs like VentureBeat, and I guess in the past 3 years become someone who serves as an analyst for the VR and AR sector in particular. When I go on calls in general with investors who are not deeply invested in VR and AR right now, and watch it from the fences, I have to dispel a lot of myths. There's a lot of ideas out there that virtual reality and augmented reality are still in their hype cycles. And that is very, very true when we're talking about the consumer market. But people don't listen and hear the facts on the ground level of what's happening in enterprise. In fact, last year was a fantastic year for the enterprise sector, both in VR and AR. It's just not as big in the media, but companies like Ford, airlines in general, any boring company with factory floors which can really benefit from huge spikes in safety levels, production levels, you name it, have gone from experimental tinkering of this technology and well into VR and AR as a best practice that needs to be applied, not just across the factory floors, but across various business lines. In fact, VR itself graduated from the Gartner hype cycle last year. People went, where did it go? From the point of view of Gartner, VR in and of itself is not a hype cycle technology. Of course, the consumer market is one thing, but media and entertainment will follow suit as enterprise takes the lead. Only last year did the standalone headsets arrive. These wires and cables that are extremely cumbersome and retro-esque are now going to be weeded out of the industry, and you're going to see what happened last year, which is location-based entertainment like VR arcades are now trending outside of Asia. Of course, Asia is a whole other story, but we'll leave that out of the equation. In Asia, VR and AR are definitely not in the hype cycle. They have 10 times more headsets, 10 times more adoption, and way less taboo of using these types of technologies for the consumer market and enterprise. Last month, in fact, mobile AR did hit 1 billion users. So adoption, however way you want to slice it, has really begun to trend. However, one of the biggest problems I see as an analyst, as a writer, as someone in the industry, is that in the 2013, 2014, during the time of Oculus being acquired and all the hype that came from it, everyone just kind of jumped into the market like cowboys and didn't create a lot of the fundamental metrics and foundation that is so key and core to developing this new paradigm. If you cannot have new metrics, native metrics that allow you to see things from the point of view of usage when there's 3 dimensions involved, you're flying blind is our point of view. And it is very, very essential that we create new ways of understanding what we're doing, what users are doing, and how to improve UX, how to improve everything across the board. And basically, you cannot do that by copying and pasting Google Analytics and just expecting it to be valid in the new paradigm. So what we've done is, as of September, we received, before September, we graduated from the Boost VC Accelerator, preparing the ground for the type of technology that we wanted to apply, serving a lot of companies. In September, we received just a small funds of $100K from a New York family office that was particularly interested in us going back into stealth mode and really developing some substantial tech. And so what we did is we hired initially 2 applied neuroscientists and mathematicians that have previous VR and AR lab experience, and we got to hit the ground really running. We developed these biometric algorithms that basically are driven by these mathematical models that take into account years and years of neuroscience research that essentially allows us to take the headset data from both VR and AR devices and translate that into psychographics and demographics about users that otherwise would require surveys, like actually asking people questions and surveys and interviews to be able to get. So how does that happen? I mean, these subliminal postures that we're always not aware of, or gestures, or motion, and the facial micro gestures, all of these types of things have an inference. I'm not sure your study up of psychology, but the stuff I read constantly, there's always a mind-body relationship, however you want to slice it. The body language is always speaking. Just because we can't actually understand what it's saying or articulate it in words, it still has an impact. And with neuroscience and machine learning, we're now able to take all these new sensory data inputs from these devices and translate them into meaningful insights. The machine learning in and of itself can also do some pretty cool stuff in terms of collecting segmentation profiles of users so that it can increasingly learn about people in the sense that if it walks like a duck, quacks like a duck, then it might just be a duck. It's that kind of simple formula, but extended over into the world of machine learning, and you have yourself a pretty amazing engine in the works for driving predictive analytics. So for instance, a company that uses our API for their anonymous users, our API would be able to reference all of the data points before and all of the profiles it has seen before and been exposed to, and create basically probabilities. And we're not saying a certainty that this user is a female, 18 to 24 age range, probably has a big interest in football or something like this, but it can create probabilities about these things. And as more and more data is fed into the API, these types of probabilities become more and more useful and accurate. So the kind of things that we're doing is, I'm going to use an example of one of the pilots we're in talks with a major sporting league. They, during an entire match, they have not a VR capability for watching their sports, but they have a 360 video, which is get on your VR headset and go in, and you can be pretty much on the court side of the Lakers game, for example. And with our biometric algorithms, for the spectator, we're able to observe them emotionally with peaks and lows. We can know when they're daydreaming. We can know when they're really excited because something happened, or maybe they're about to anticipate something that's really cool that's about to happen. And we're able to do trend analysis because all these data points come together, and it is a data scientist's dream. So we're basically in a brand new world, brave new world, where there is all these new possibilities in data science, machine learning, and market research. Last week we won. We were voted a finalist in the IEX, which is one of the top market research conferences in the world, and I'll be going and pitching in Amsterdam. And market research as an industry, you can understand, is going to find perhaps the lowest hanging fruit in all of the new kind of gems that are available with this technology. Consumer is very important in the sense of perhaps sporting leagues and a variety of maybe some of the top gaming developers and film creators. But in general, as I mentioned in the beginning of the presentation, enterprise is where the mainstream action is. The consumer market will be forever, at least for I would say 5 more years, be unpredictable, and stability will be something that it lacks because there's a lot of hardware iteration that's happening right now. We have smartphones that perhaps we keep on trading in every year. With the headsets in VR, sometimes people are trading them every few months. So the iteration is way too fast. And for the consumer market, I would suppose that it is not where a business should be prioritizing their model, their revenue model. We want to prioritize towards the needs of enterprise that are applying this technology for very serious use cases. And they're HR managers, they're the heads of training divisions and so on. They need analytics to understand how this technology is being affected by their employees, how employees are responding to them, how are employees adapting and becoming better at using these new types of mediums. All of these types of things can be provided to them, and they can afford the higher price points that would make our revenue model worthwhile. For instance, there's a huge issue right now where VR and AR content is developed with the able-bodied person in mind. The person that they think the VR content is adapted for has 20/20 vision, has good hearing, has great, there's no sensory challenges, but the world has far more nuance than that. There's people who don't have the best hearing. There's people who have mobility restrictions. Our API can also detect these types of challenges in users and potentially allow content to adapt to them. So there's an additional dimension there that is increasingly important for HR, because maximum accessibility is something that's quite prioritized. Down the road, and my personal interest of why I'm in this business comes down to the third use case that's listed here of potentially being able to even use this technology to study learning disabilities, and being able to even potentially down the road treat disabilities like dyslexia or ADHD, maybe not directly, or at least have content be able to adapt itself to people who interface with the world differently. Back to the sporting league example, there's a lot of low-hanging fruit. Again, not just adapting to users, but personalizing things to them way more, because the technology is listening in a way that it can create customized experiences. We're not talking about issues of data collection and privacy issues, stuff like this. All data is anonymized, but for the user themselves, based on their preferences and their clicking on the right buttons to activate, they have the opportunity to have content really adapt to them. So for example, in this particular case, imagine watching a highlight reel at the end of a basketball game that is personalized to your peak moments of excitement, your peak moments of enjoyment. That's the kind of technology and low-hanging fruit that's starting to be available because of the new data devices and what they provide. The type of revenue model that we're working out right now, and this is an ongoing discussion. What you're seeing on this slide is really up to debate on what will make sense. Will come and become more clarified as we do more pilots. We have basically 3 pilots right now in motion. One is with an automotive AR remote engineering case. Another is with the sporting league. And we have a third with a headset manufacturer where they want to potentially integrate the solution for their enterprise solutions. And in all of these cases, we're going to have a lot of input from them on where the value is and how we can price it accordingly, because based on the revenue model we've set up here, it would be based on server calls. And based on the amount of data that we'd be flowing through these new devices, you can imagine it can be quite extensive. And so the model needs to make sense. And that will be something that I think we'll have more clarity on in the months to come, probably by Q2 or Q3 latest. We're raising $1 million seed round right now through SAFE agreements in the UK. We will accept ASAs, or advanced subscription agreements. The funds are going to be used to primarily grow the development team and data science team and machine learning team here in Lisbon, which is where our subsidiary and HQ is based. However, our parent company is UK based, particularly because we want to be able to participate in all of the UK government's grants specifically for the VR and AR industry, which is extensive. We also have a MOU that we signed just a few months ago with the university in Cambridge, Anglia Ruskin, where we can, through an academic partnership, be able to more validate with PhDs and the like some of the technology that we've created and fine-tune a lot of the areas. We have one other project that's extremely essential, but I've not mentioned it here. which is a consumer-facing app called the Attention Lab, which will be launching on the Oculus store. The Oculus is one of the biggest, of course, headset manufacturers, and they're the primary one we're actually supporting, the Oculus Go headset. And we're launching this app, which basically features a series of gamified experiments. If you guys know the one with a basketball court and the players are all passing the balls back and forth, and you as the user have to count how many times it's passed. And then at the end, you realize that you never saw the gorilla moonwalking through because your attention was so sidelined from the activity. We have gamified experiments like this that are intended to challenge users, and then at the end of it, teach them about their brain science and how their brain works. And the reason we do that is that it supplies a lot of data, anonymized data, of course, to stress test our algorithms and make our API machine learning smarter, which obviously benefits the core platform being offered to corporations and any clients we have. The team, as I mentioned, my previous background for the first half of my career was in the market research industry. I ran online research panels for the likes of the UFC, NFL, and Electronic Arts. Roland Dubois is the crazy scientist on our end. He is the mastermind behind the tech. He is the creator of the award-winning universal avatar API called Graver. It's the kind of technology that, if you've watched Ready Player One, in this kind of concept of the metaverse where you jump from VR experience to VR experience and you have your persona or your avatar still intact, well, that's the type of technology you need to have developed first to be able to do that kind of stuff. And Hossein Jalali, our CTO, myself and Hossein have worked together for many years back in Dubai, running a digital agency together. And so us three, along with 5 other employees, we make a team of 8 and 1 part-time. That brings us to 9 members. 2 of them are based in Lisbon, and we hope to be able to grow that here in Lisbon. And that's it. Thank you so much. I hope to have some questions.
Hey, Amir, thanks a lot for the pitch. We have a question from Shuhan. Question is, how do you expect your revenue to grow in the next 5 years?
You know, if I have to have a wish list, then it would be based on this, tried and true SaaS freemium model where, just like any SaaS model for the enterprise, typically you have a few buckets of extensive extra usage, and then you have the custom quote one where as a company you don't get jeopardized into a bad situation. And so you can always be making revenue based on that model, purely based on API calls and proportional charging. How would I see our revenue? I'm extremely delusional about, in terms of grandeur of my company. I think we're developing stuff that I don't know a single other company has developed. We are sitting at the intersection of neuroscience, machine learning, and spatial computing. I see ourselves as a unicorn. I see ourselves as being attacked by early acquisition offers, particularly by that headset manufacturer I'm in talks with this week. Unicorn presupposes, tens of millions to hundreds of millions of revenue. So within 5 years, if you guys follow Singularity University, all these technologies are colliding with each other. 5 years is a tremendous period of time. Right now, everything is accelerating.
Thanks a lot, Amir. There's another question from the audience. At 1 million seed round, how much runway will that give them or give you?
We're probably going to stretch that between 12 to 18 months.
Considering so much research and development going on.
Well, here's one thing. It really depends on how clever I am in maximizing the advantage of being based in Lisbon. Now, I've written a few articles about Lisbon, but I wouldn't have known much about Lisbon if I didn't write those articles. So it's a huge talent pool of particularly for engineers and developers. My Unity developer, who previously I stole him from a AR enterprise company, so he has relevant experience as well. His gross salary is about 1,800 euros per month. Now, my peers in Silicon Valley are probably paying 5-7 times that value for the same guy, same quality in terms of what I value him at. in London 3 times, maybe in Amsterdam 2.5 times. So I think I can stretch it to 18 months, but at the same time, we have to see how our business grows and what the needs are. And perhaps we would have to start raising as early as, we'll raise the next round as early as 12 months from now.
That sounds pretty interesting. Any other questions from the audience? Okay. Hey, Amir, thanks a lot. Presentation was really interesting, and I'm sure that your dream of making a unicorn will come true pretty soon. Thanks a lot, and talk to you later. Take care. Okay, we have friends of mine on the call, Lo and Matt, and they would be talking about next pack. So why don't we give it to Lo and Matt? They can start sharing their screen. They can, introduce themselves and next pack, and we go from there.
Hey, hello, Lo Fortune. I'm the founder, CEO of NextPack. I won't say too much about myself. I want to get Matt on and giving you a background of who we are and what we do. So let's go ahead and get going here. Okay, Matt, are you ready?
I am all set, Lo.
All right, you have the con.
Well, first of all, Package, we appreciate the opportunity, and glad that everyone else joined us this morning. Some great presentations earlier, and hopefully we can take everyone through, and we'll have just the same amount of excitement. So what is NextPack? NextPack, ultimately, we're designing to be a couple different things, but at the end of the day, we're all about creating a frictionless last mile delivery experience by creating an ecosystem that helps supports businesses within a local community be able to, in essence, compete with the big box retailers, the large international chains, as well as the Amazons of the world, as it relates to providing basically real-time on delivery, demand-driven, point-to-person delivery in a very easy to use interface. We look at some of the industry as it relates to what's driving this, and as you can see on the screen here, there's an ongoing demand and drive towards same day. The puck and the game continues to change as people's expectations become more and more real time, and quite honestly, with Uber and the likes, Lyft, they've also helped accelerate the promotion of that type of on-demand type of service capability. When you look at the market opportunity related to, still we're at the tip of the iceberg in terms of the number of businesses that don't offer these types of delivery capabilities, and ultimately what that represents for us is really a wide open, fertile landscape with which to identify customers and ultimately bring them into the NextPack ecosystem. Ultimately, it's about this bring it now to me economy. People want convenience, they want security, they want privacy. When we look at what we're doing in the marketplace itself, we're leveraging really at least from the U.S. centric perspective, the strength of the small business environment. 99.7%, 99.9% of all businesses in the U.S. are small businesses. They account for a significant portion of revenue ultimately. And we believe that as a result of equipping them with something that helps them offset and really participate in this growing bring it to me now world, that we can really create a lot of benefits for them, not only in the local community as business owners, but when you look at those people that live in the local communities and areas that want to do business and want to buy locally, we also give them the opportunity to be able to do that in much the same way they would with an Amazon or anybody else. I would say the third pillar for us is also creating a sustainable ecosystem of drivers and really a labor force to help facilitate the movement of a lot of these goods that are being shipped and ultimately transacted between the merchant and the user itself. So really, for us, how do we do it? we've got not only just are we not just a delivery capability that is highly driven on a lot of technology and complex algorithms behind the scenes, and really how we identify and match